Tuesday, June 25th, 2019, Maneco 64, home of alternative economics and contrarian views. So the gold market continues to ramp up. Overnight, we made a high almost at 1440. And right now we've come back down. So I want to talk a little bit about that, about the silver underperformance and what I think about it. And I also want to talk about the corporate bond market, especially the high-yielding corporate bonds, and what's happening at fund managers like Woodford that we've seen. And now there's another fund manager, H2O, who is in trouble. I want to talk about China and gold as well. There's a lot of things that are going on that it's difficult to say what is impacting what. This morning, before I go into the China gold story, into the corporate bond market and the trouble with fund managers, I will look at the markets and I will focus on the gold move and see if the price move is telling us something about China. So here we are, it's 7:30 a.m. London. Gold right now is up $8 at 1427.50. The high, as I said, was near 1440. It was 1439.60. So let's look at the chart here, because I've been noticing a lot in the last week or so that the big moves in gold are happening like early for me in the morning, like sometime between before 5 a.m. London, when Asia is in. So you look here on the 20th, well, today we're the 25th, right? 20th of June, gold started moving around 1 a.m. London from below 1360, and it went up all the way to 1394. And that was what time was that? 2 in the morning. And then you go to the 21st, and the same thing happens. 1 o'clock a.m. Friday, June 21st. We go from around 1392 all the way up to 1412, and that was about 3 a.m. London time, pretty much when Asia is in, right? So today, gold was pretty firm already yesterday after the COMEX open overnight, which is 6 p.m. New York. But then again today around 3:30 a.m. London, it moved from 1425. It was around, well, it was just before 4 a.m. It was around 1425, and it spiked almost to 1440. That was 5 o'clock, so it took an hour. So all during Asia trading hours. So it's interesting when I talk about this article after I finish looking at the markets and China. So what about the other markets this morning? Silver, as I said, is lagging behind. The high was 1552. Right now we're at 1540. It's down 2.5 cents. The gold silver ratio is at 90:70. It's that's highly elevated. I mean, I've said in the past, and I hold my hand up, I don't get everything right, that silver would be driving the precious metals bull market. But right now, the bull market is only in gold and not in silver. And to be honest, I don't know why. Maybe it's because we're seeing sovereign buyers of precious metals, and usually sovereigns or central banks buy gold. Maybe that's why. We'll see. The Dow right now is down 45, 26,684. That's down 0.17%. S&P is down 6.5, 2939, or just under 0.25%. NASDAQ 100 futures down 28, over 1/3%. The currencies, the pound is up a little bit, up 0.15 versus the dollar, 127.59. Euro is virtually unchanged. It's at 114.02. So I don't think Trump is complaining now about Mario Draghi. When he did, we were at a 112 handle. So now the euro's gone up to 114. Euro versus the dollar. Dollar is down 1/3% against the yen at 106.94, and the dollar is up 0.1% against the yuan, Chinese yuan, 688. Crude oil, WTI is virtually unchanged, down about 10 cents, 57.78. Brent is down 1/3%, 64.01. Bond markets, I noticed yesterday, even though the stock markets did finish a little lower yesterday, that it wasn't a huge move down. This is what the bond markets did yesterday. I took a screenshot because it changes all the time. But see how the yields dropped. The 10-year dropped almost 5 basis points to just above 2.01%. All around, all through the curve there, the belly of the curve as they call it, from the 5-year to the 10-year, we saw a big drop. That's a big drop, 5 basis points in one day, in spite of the fact that the stock market remained fairly steady. So where are we right now? So right now, this morning, we are at 2%. So it's dropped another 1.7 basis points, the 10-year yield. The 3-month is at 2.12 or 2.13. So we're at 13 basis points inverted. So there's something wrong out there. And that's what I'm going to talk about now. Before I look at an interesting story that's come out last night from RT.com. It says RT question more, and it's the business news. It says, down the yellow brick road, China buying gold and dumping dollar assets as trade war with US escalates. So I think that's one of the other reasons why gold has been doing well, apart from the fact as well, in my opinion, that the turnaround that central banks have made from tightening monetary policy, from trying to get back to normal after 10 years of money printing, zero or negative interest rates, that turnaround, I think, has also convinced investors that gold is going to be the place to be, because central banks don't have any other thing, anything else they can do. They're going to cut rates. They're going to go to zero, the Fed. We're going to see the ECB go even deeper into negative territory. They're going to be printing more money. So gold going up like this is also a barometer of confidence. The more it goes up, is less confidence investors have in what central bankers are doing. I even saw yesterday an article in the FT saying that the Bank of England is considering Janet Yellen as a governor of the Bank of England once Mark Carney leaves early next year. I mean, they're really getting desperate that they need someone, a figurehead, to keep confidence, right? You should, in the scheme of things, you don't need, central banking is, as good as they seem to think it is. Anyone should be able to do that job, right? So anyway, this is what the story says here, and I read from the story. Gold prices rallied to 6-year highs last week and continued posting gains on Monday at $14.03 per ounce. So yeah, we've been moving up very quickly. Yesterday, we closed last week at 1,400. Yesterday it started moving up again. Overnight it's going to 1,440. So it's happening quickly. Am I saying it's going to keep going up? Am I saying it's not going to correct down? And well, it has already overnight. For traders, yeah, you need to be nimble. For stackers like you and me, hopefully you as well, you just got to sit tight and try to keep stacking. I have to say, I did buy some gold last Friday, some sovereigns, and the premium was quite high, 4.6%. Did that stop me from buying it? No, it didn't. But you need to consider that now. The price that you're going to get for physical gold is completely different from this price. It's even higher. So it says here, China boosting its gold stockpile to shift away from the US dollar has added to the precious metals resurgence. So yeah, there's more than just the central banking reason. There's more than the technical reason. There's the geopolitical reason. The People's Bank of China has purchased more than 70 tons of gold since December, according to the World Gold Council. Before that, the Chinese central bank had not reported an increase in gold reserves for more than 2 years, and the official figures remained unchanged from October 2016 to November 2018. That's the other important thing as well. I think aside from buying gold again, the Chinese, is the fact they're actually reporting it, because they could have been buying recently and not reporting. So why is that important? Because I think they want to send a message to the world. The increased gold purchasing by Asia's top economy comes at a time when global central banks are accumulating the precious metals in record numbers. Russia has been the top buyer of gold, adding 274 tons to its reserve last year. In the first 5 months of this year, Russia added 79 tons of gold to its coffers, increasing the metal's share in its international reserves by 3.7%. So there you go. That's what's been going on with the central banks, and that's why I think maybe silver is not, how can I say, following in the footsteps or even leading gold for the moment. The other thing that I think is impacting gold, aside from China, aside from the turnaround in central banking monetary policy, I think, and the realization that central banks will never be able to go back to normal, and they'll have to keep rates at zero, negative, and keep printing, is what's happening to investment management world or fund management world. We've had some stories, especially here in the UK. Woodford Fund, they've blocked accounts from clients because they had money in illiquid investments and bonds. And now we've got this other fund manager here, which is owned by one of France's biggest banks, Natixis. They've just announced that, the FT wrote an article last week, someone in the FT, saying that a lot of their holdings were of bonds owned by a German investor or a German entrepreneur that has some, not shady, but he's got legal problems. And then people started liquidating this fund. So this is the H2O fund. And it's ironic because the guy who started this fund, he named it H2O because it's, water and it's supposed to be liquid, right? So it says here, H2O dumps illiquid Windhorst bonds as it battles crisis. So Windhorst is this German entrepreneur, right? So it says here, London subsidiary of France's Natixis left with 500 million exposure as it tries to staunch outflows. It is a French bank, but the fund is based in London. It says H2O Asset Management has scrambled to offload hundreds of millions of euros of illiquid bonds as the asset manager battles a crisis triggered by an outsized bet on debt linked to a controversial German financier. And the other story I saw here in the FT related to these bonds is this one here. Tale of two markets. Riskiest bonds hit by trade worries. Debt rated CCC have fallen 1.5% since May, underperforming BBB. So this is the story, the old saying of when things start getting tough, financial conditions, and the tide starts going out, you start seeing, who's really, who's naked or who isn't. And I think this is starting to feel, Woodford Fund, this H2O. I think there was another fund earlier this year. I think it was MG. I think it was a Swiss fund. They're all having trouble. And it feels a little bit like in '07 when we started seeing people talk about the problems at subprime lenders. So this could also be driving investors to gold. Maybe people are realizing that these fund managers are not really looking after their money properly, and that they want their money back and they want to put it in something that they can hold on to. Fund managers have done very well for themselves. You know, all the easy money has given them, you know, those chunky fees annually, millions and millions of dollars. But now people are starting to see, whoa, wait a second, you know, if Woodford can freeze my money, what else are they going to do? I read as well that what H2O is doing to try to discourage clients from taking their money out, you know, liquidating their funds, is that they're pricing the funds really low to discourage. I mean, it's ridiculous. I think we need to keep an eye on these. Right now, this seems to be happening in Europe, but don't be fooled. It could happen anywhere in the world. So there you have it. Gold, China, corporate bonds, funds, central banks. A lot of reasons why gold is up. Technicals as well. We broke 1375. I did make a video a few weeks ago of that 1375, 1380 level, which is a Fibonacci retracement, that once we break that, we could see gold really shoot up, and it has done so. For traders, yeah, be careful out there, because we could turn right back down and go to 1375. But I wouldn't hold my breath. But normally in a very bullish market, that kind of pullback happens. Does that mean you need to get rid of your gold if you're a stacker? No, just sit tight. You know, that's why they call it a bull market. It's a rate, you know, you got to hold on to the bull. If you enjoyed this video, make sure you hit the like button. Subscribe to the channel if you haven't yet. And you can also follow me on Twitter, Steemit, and on DTube. Billy seems to know by now when I'm finishing the video, because he gets up and leaves. Anyway, take care. Bye.